Hello, everyone. I welcome you all to Tech Mahindra's Q2 FY'26 results press conference. Before we begin, I'd like to inform you that there will be a Q&A session at the end of the conference. Today, we have with us Tech Mahindra's CEO and Managing Director Mohit Joshi and Chief Financial Officer Rohit Anand. Over to you, Mohit.
Thank you, Abhilasha, and good morning, good afternoon, and good evening to everyone. Thank you for joining us for our earnings call today as we walk you through our second quarter performance. As a leadership team and as a board, we're in London this week. So as we stand today, we are exactly midway through our three-year strategy. And I'm happy to report consistent and steady progress towards our FY'27 goals. The first half of our journey has been about strengthening our foundation, about building resilience, and creating an organization capable of sustained performance. The second half is where we believe this foundation will turn into further decisive action and further competitive gains as per our strategic plan shared with you earlier. Let me now turn to our second quarter performance. For the quarter, we reported revenue of $1586 million, reflecting a 1.6% sequential constant currency growth and remaining largely stable on a year-on-year basis. This marks our strongest quarterly constant currency growth in the past 10 quarters. The growth has been broad-based across manufacturing, BFSI, retail, travel and logistics, and healthcare. On the margin front, we have been focused on delivering profitable growth, and we have been able to consistently expand our margin every single quarter since we presented our FY'27 plans. In fact, our EBIT margin in Q2 stands at 12.1%, which is significantly higher than where we were at the beginning of this journey. That is a testament to the discipline we instituted under Project Fortius to bring in operational efficiency, disciplined execution, and cost optimization, along with early initial progress in value-based price optimization. Let me now delve deeper into our industry-specific performance. Now, in our communications vertical, we saw a year-on-year decline of 2.2%, yet the segment remains largely stable. Our largest client has stabilized its spend and delivered growth above the company average this quarter. We continue to invest in key client partnerships. A key European telco client is set to launch their large telco model to bolster their service experience center. They are revolutionizing operations across network, IT, and customer domains, promoting service centricity and building a truly data-driven ecosystem. They're scaling AI and enhancing automation to drive meaningful outcomes. We're investing in our advanced solutions and partnering with them on this journey. The manufacturing vertical posted 5.2% year-on-year growth. The aero and industrial segment showed good traction. This has been buoyed by the demand for smart manufacturing, predictive maintenance, and digital twins. Automotive has been broadly stable this quarter. However, we remain cautious, particularly in the commercial segment, which continues to face headwinds, while the passenger vehicle segment shows some early signs of stabilization. For BFSI, this has been up 6.2% year-on-year, reflecting the focused areas that we have prioritized for growth. Supporting these priorities, we have forged partnerships with, for instance, JP Morgan Payment Systems as part of their integrator program to co-innovate and deliver differentiated value through the deployment of next-gen payment solutions. These alliances deepen our domain capability. In BFSI, we have a long journey still in terms of client acquisition and growth, and there will be volatility, but we have established a firm foundation to build on. In retail, transportation, and the logistics business, we delivered a 7.2% year-on-year growth. We are witnessing strong tailwinds in the logistics domain, driven by e-commerce expansion, automation and warehousing, last-mile delivery optimization, and seeing all of these are resulting in strong traction in the logistics sector. From a geography perspective, Europe delivered a good performance, up 5.5% year-on-year. Americas has shown a decline of 2.7%, primarily due to the challenging macroeconomic conditions. The rest of the world has declined 0.5% on a YY basis. Now to turn to sort of the client landscape. And this quarter, our 20 million plus annual revenue client bucket has continued to deliver growth above the company average, with contributions surpassing $1 billion just this quarter. As you may recall, this has been one of the key focus areas in our strategic plan and our success on this front reflects the effectiveness of our sustained efforts in driving scale and value. In addition, we added 57 must-have clients in fiscal year 25, plus we secured an additional 21 accounts in the first 2 quarters of this fiscal year. Of these, 17 have already generated over $1 million in revenue each, demonstrating both the scale and speed derived from our early growth efforts. Let me now provide you an AI update. First and foremost, we are honored to have been recognized by the Government of India as a key player in the prestigious India AI mission. This aligns with the country's objectives to bolster leadership in AI, to foster technological self-reliance, and to ensure the ethical and responsible use of AI. Now, as part of this mission, we are partnering to develop an indigenous sovereign large language model with 1 trillion parameters, a significant technical milestone that places it among the largest AI models under development globally. This vision aligns seamlessly with the commitment to unlock transformation, to drive productivity, to accelerate innovation, and to ensure assurance through our AI delivered right strategy. I'm proud to announce that we launched TechM Orion, our next-gen agentic AI platform built on NVIDIA that enables intelligent autonomous execution of complex business workflows. TechM Orion enables global enterprises to deploy AI solutions faster, whether in assisted or a fully autonomous environments, while maintaining control and transparency throughout the AI lifecycle. Our solution integrates AI agents across platforms, simplifies orchestration, and enables scalability with our embedded assurance guardrails. TechM also unveiled TechM Orion Marketplace, an agentic AI marketplace that offers a robust ecosystem of intelligent, autonomous, and action-oriented AI agents that collaborate, evolve, adapt, and scale. It's always good to get recognition from industry analysts, and I'm proud that Tech Mahindra has been recognized as a leader in the Gartner Emerging Market Quadrant for Generative AI Consulting and Implementation Services. We are especially proud to be recognized as #1 on the Future Potential axis, which really underscores the trust in our ability to shape what's next in AI. On the GCC front, we extend our strengths in global capability center services. I believe Tech Mahindra is uniquely positioned to offer an integrated value proposition to global enterprises. Our deep technology expertise and digital transformation capabilities are complemented by broader strengths within the Mahindra ecosystem, from world-class infrastructure through Mahindra Lifespaces and Origins, to renewable energy solutions from Mahindra Substan, and financial advisory support via Mahindra Finance. This combination enables us to offer customers a seamless end-to-end pathway to establish and scale their GCC operations in India with speed, reliability, and sustainability. It is this blend of technological depth and ecosystem advance that truly differentiates Tech Mahindra and positions us as a partner of choice for global organizations. Let me just talk quickly about deal wins now. So this quarter, we closed a net new deal of $816 million overall. This represents a 57% increase on a last 12 months basis. The deals span key verticals, including communications, manufacturing, retail, transport, and logistics. And this reflects the broad-based nature of our wins. For instance, we partnered with a leading US telecom-based operator to advance its network testing and certification, automation, and optimization initiatives under its long-term transformation vision. The engagement focuses on accelerating network testing and certification through a homegrown automation platform, leveraging our delivery excellence and agility to drive greater efficiency, scalability, and innovation across operations. We were also selected by a global logistics leader as a strategic partner with a multi-year framework agreement to drive AI-led efficiency and transition to a productized IT organization. So this is essentially transitioning from manual high-touch operations to an AI-driven, automated, and self-service enabled global desk. Tech Mahindra was selected by a leading European telecom operator as a strategic partner to accelerate its enterprise-wide autonomous operations journey. Through this engagement, Tech Mahindra will consolidate and transform the customer's ecosystem, delivering an AI and automation-led landscape that accelerates the realization of their vision for autonomous operations. Tech Mahindra was selected by a leading life and health insurer in the Asia Pacific region for a multi-year application management services engagement. This is to modernize the core and digital platforms through AI-led automation and a cloud-first transformation to enhance operational efficiency and scalability. We were selected by a leading semiconductor equipment manufacturer, to spearhead the enterprise application transformation. This is across SAP, data analytics, AI, and ADMS. This advances automation, resilience, and scalability across all of these semiconductor equipment manufacturers' core business platforms. As you would recall, one of the key pillars of our 3-year transformation roadmap is a renewed focus on our brand. So in this regard, I'm really pleased to share that on the 24th of October, as Tech Mahindra marks 39 years of innovation and impact, we will unveil our refreshed brand, a powerful evolution that honors our heritage and redefines our vision for the future. This refresh is inspired by our ambition to make Tech Mahindra's brand as progressive and contemporary as the transformation that we deliver for our clients. In a world that is being reshaped by rapid technological change, our identity must reflect who we are: agile, bold, collaborative, and discerning. Beyond a strikingly modern visual identity that brings our entrepreneurial spirit to life and ensures a consistent expression across every touchpoint, this comprehensive refresh also establishes a unified brand platform. It defines a thoughtful approach to integrating our portfolio companies and strengthens our position as a globally preferred employer through a renewed employee value proposition. The refresh honors our present while shaping our future, supporting our growth ambitions and reaffirming Tech Mahindra's position as a trusted partner in digital transformation worldwide. We've also been honored to receive a number of accolades. We have, for instance, won 5 gold medals at the Brandon Hall HCM Excellence Awards 2025. So these awards recognize our achievement across talent management, human resources, learning and development, diversity, inclusion, and equity and belonging. This recognition reinforces our commitment to building a high-performing culture with a strong focus on learning and development, inclusivity, and process-oriented excellence. In other awards, we were awarded the High C Sustainable Design Award 2025. This has been a huge area of focus for us, and it reaffirms our innovative and impactful initiatives in the category of environment support. So now, as we as we round out this quarter, I just wanted to mention that we have delivered a broad-based performance. There has been exceptional large deal momentum, a continued margin expansion, and a steady contribution across all the focus areas that we had identified when we shared our plan. So with that, I hand over to our CFO, Rohit Anand, for the detailed overview.
Thanks, Mohit. Good morning, afternoon, and evening to everybody who's joined us different part of the world. As Mohit rightly mentioned, we're now at the midpoint of our strategic plan, a journey that has been both challenging and rewarding. What we've achieved so far is a result of the team focus, discipline, and shared objectives towards our FY'27 strategic goals. Let me share our financial performance for the second quarter of fiscal 2026. Our revenue stood at 1586 million, an increase of 1.4% on a QOQ on a reported basis, and a decline of 0.2% YOY on a reported basis. On a constant currency basis, revenue grew 1.6% QOQ and declined 0.3% YOY. The growth this quarter was broad-based, driven by performance in manufacturing, BFSI, retail, travel, and logistics, and healthcare verticals. From an INR perspective, as we saw some FX tailwind, the revenue grew at 13,995 crore compared to 13,351 crores in the previous quarter, a growth of 4.8% on a sequential basis and 5.1% growth on a YOY basis, aided, as I mentioned, on INR depreciation. Our operating margin increased by 108 basis points to reach at 12.1%, marking the 8th consecutive quarter of margin expansion. This consistent improvement reflects our ongoing focus on operating efficiency, cost optimization, and value-driven execution. Margin expansion this quarter was primarily driven by improved productivity across the project portfolios that we drive in various initiatives around fixed price projects, some volume growth that we saw, savings from SG&A. And additionally, we got benefited from the currency tailwind of about 40 basis points. Our other income declined to 4.6 million this quarter on account of forex losses. As of September 30th, our hedge book stood at 1.33 billion compared to 1.64 billion in the previous. Our effective tax rate for the quarter stood at 27.6%, in closer to our expectations, and the normalized ETR for the full year is expected to be around the 27% mark. Our profit after tax for the quarter is 135 million, an increase of 28.2% on a YOY basis, outside of the exceptional item of land sale during Q2 F25. In INR terms, PAT was at 1,194 crores at a margin of 8.5%. On return of capital employed, we were at 24.4% this quarter. This demonstrates the significant progress we've made in improving financial efficiency and returns since the beginning of our plan. On a YTD basis, our free cash flow to PAT ratio now stands at 120.8%. During the quarter, free cash flow was at 237 million, driven by strong collection efficiency and continued improvement in working capital. While our DSO decreased by only 1 day due to quarter-to-quarter basis, the reduction appears modest compared to the much higher collection inflows, which was largely offset by the FX impact, given the INR depreciation that we saw. On an operating basis, the DSO improved by almost 5 days. Our total deal wins for the quarter, as Mohit mentioned, was 816 million, reflecting a massive 57% growth on a last 12-month basis. The deal win were broad-based across multiple verticals, which improved win rate underscores the trust our clients are placing in us. The board has also recommended a dividend of rupees 15 per share, reaffirming our commitment on the laid out capital allocation policy of returning more than 85% of our free cash flow back to the shareholders. With this, I now hand it back to the operator for Q&A.
Thank you, Mohit and Rohit. We will now conclude the stream. For those of you who have joined us on social media, thank you everyone for joining us. We will now